Hi, this is Jack from Alpha Charts with another Inside the Trader's Head. Today we have Christian Fromhertz, which is the head trader and founder at Tribeca Trade Group. He's previously with, Christian was previously a director and senior ETF trader with Bank of America and Merrill Lynch. And while at BAML, or Bank of America Merrill Lynch, Christian traded for institutional clients and provided risk markets in domestic, international, and fixed income. Um, Christian, welcome. Thanks for being here.
Great being here, Jack. How are you?
Oh, pretty good. How are you doing today?
Good. Well, it's Monday, and another interesting day, I would say, in the markets. A little bit dull today, but I think kind of expected considering last week was a nice week, a lot of momentum. Nasdaq, finally came alive last week, which I think a lot of people were expecting. So I think it's quite normal on a Monday to have a little bit sleepy type day, but so all in all, pretty good. No complaints.
Excellent, excellent. All right. And so before we get started real fast, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security, and we may hold positions in some of the equities mentioned. Everyone should know their own risk tolerance and timeframes. All right. I'll tell a little story before we get started. So actually, Christian was the first person I ever met in person that I first knew on the internet through FinTwit. So me and my family were visiting New York right before COVID hit in December, and
That's right. It was right before COVID.
it was right before COVID, and we hooked up at a pizza place over in was it Soho, right?
Yeah.
That area,
Yep.
and some pizza, had a couple drinks, and it was a great conversation, a good evening over there.
Yeah, it's always, and it's nice being in New York City because I get the privilege of whenever I see traders or hear that traders are coming into the city, I love to meet up with people and really kind of put a face behind the name. I mean, it's great always chatting on Twitter and getting to know people that way too, but it's so much better meeting people in person. And hopefully we'll kind of be through the COVID situation sooner than later so that we can get back to doing that, because it's one of the things I really enjoy is going out with, meeting, some of my members too, but just, traders who just want to get together and have a beer and talk about what they're experiencing on a day-to-day basis. Because Twitter can be a little bit of a dry place sometimes.
Absolutely, absolutely, and yeah, it's how's New York, by the way? Is it back to normal, or is it getting there? What's it like over there?
It's getting there, and at this point, it's been over a year, right,
Mhm.
since things kind of really, the bottom kind of fell out. It's been, a gradual. There's been more traffic. We've been seeing more and more people kind of come back to work. I've been here basically. I skipped basically a month where I wasn't coming into New York, but after that, you know, one of the things that I actually, you always try to take positives from some of these situations, but New York is always such a busy place that I was actually for a while just, enjoying my commute with not seeing as many people, and kind of just being able to walk around New York City where, you weren't getting, kind of hit all the time, walking into people and so forth. So, it's nice to see, especially for the small businesses and restaurants, to really see things come back. And I think for the most part, both locals and some of the people who are traveling here, everybody wants to experience, New York City and be able to go out and do some fun things. So it's nice to see it get back to where it was. And yeah, I think things will only get better from here.
I think so too. But yeah, it was great to meet you that night,
Yeah.
and yeah, so good stuff. All right, so what I like to start out with is more of the psychology behind trading with these. So first off, let's know a little bit about your background before we even get
Sure.
started.
Yeah, so my background, it used to be Merrill Lynch. The name's changed a couple of times. Then it was Bank of America, Merrill Lynch. Now I think they're officially BOFA. But I started as an institutional trader back, in the early 2000s, and I did that for a number of years. I traded basically all types of equity products, but I specialized in Delta One trading products. So you actually hear a lot about these, recently with the fund that just blew up, but you
Mhm.
hear about total return swaps. And I knew once we started to hear about total return swaps, uh-oh, like here we go. We're going to hear about, oh, there's massive leverage, and is this a systematic risk? And it's really, total return swaps. And it's a product that I traded for a while because back before ETFs really began to flourish, for a while, ETFs were basically just, a product that hedge funds were trading before retail really got a hold of it. And there was just your sector ETFs and your main large index products. And that was really the heart of the trading. It was basically a hedging product for hedge funds. So if they wanted something more specialized, more customized, and there wasn't an ETF out there for, say, agriculture or blockchain stocks, they would actually develop their own customized ETF. So because that wouldn't really trade, as an index on an exchange, what we would do is customize like a total return swap, and we put that product in there. And there's various different reasons why people do, put the product on a total return swap. But it's just funny because the product you'll start to hear when something goes wrong, and that's typically on Delta One desks too. When something goes wrong there are a few reasons for it, but it usually will arise out of a Delta One trading desk because there are derivatives that are handled there. Delta One traders are also handling a lot of different products. They're not only handling what's, a total return swap, but they could also be trading ETFs, which is what I did for a long time. I was an ETF trader and made traded block trades similar to the ones that have been going up with this particular fund. But I used to make markets for big institutional clients, right? So we call that, risk trading or providing, block trades for them, big, real big markets. But there's also a lot of other things that are involved on a Delta One trading desk, like trading futures. You could be doing some arbitrage between futures and ETFs. So it's a lot of, being that there isn't just one particular product, a Delta One trader really has to know how a lot of different markets function and a lot of different products function. But I did that for a number of years, and then I switched more over to ETF trading as that product really started to develop, and there became more and more ETFs out there and more parties trading ETFs. It just really kind of ramped up with volumes, and now you see it, kind of evolve to what it's become today. And you have actively traded, ETFs like, Kathy Wood has obviously gotten a lot of attention, and it's great that she's provided so much transparency to the field. And you're starting to see that, her be now the benchmark for the product with, that you could have an actively traded, and transparent product, and it has an ETF wrapper around it. So it's pretty interesting. But really what that's kind of just to kind of gravitate to our talk today, it really has helped me specialize in a number of different things. Like, for example, if we would have an ETF client, a hedge fund who would want to trade China, right? I would need to, get to know that product pretty well. Or if someone wanted to trade, a big block in retail or the home builders, right? So it really kind of got me to get familiar with a lot of different markets. And when we're starting to see things like we're seeing in 2021 with a lot of sector rotation, it makes it a little bit easier for me to kind of just jump on what I see as a new trend, because it was something that I had to learn in my institutional career to be like, well, hey, I don't know how to trade China. Let me learn about it. I'll figure it out. And then, I'll be very well versed when someone wants to come in and trade emerging markets, or they want to trade China or, India. So I use that a lot in what I do now. So you will find me really being able to change gears pretty quickly. So, we've seen a big rotation out of growth and into value for the beginning of the year. And I can kind of go with the flow pretty easily, right? I have to get a little bit acquainted with what's going on and kind of do the studying to see, what names in those particular groups that are now seeing new money, gravitate into them. Obviously I want to track the leaders and the best of the best, but I could do it pretty quickly.
Awesome. And, to just add to that, your end of day videos, and sometimes in the morning you post videos, they're phenomenal because
Thank you.
And I mean that because I remember this was maybe 2 years ago, and you were talking. It was quad witching, and you did a whole video on basically what that means, what the
Yeah.
institutions are doing, the week prior, and really explained it so good, and that really just kind of it was awesome. So
Yeah,
I
I
really
enjoy
appreciate
it.
that.
I mean, there's a lot of things that I think, retail traders, they just, most of them obviously haven't traded on an institutional trading desk before. And, I've really spent a lot of time through my career. I used to trade that day, used to be one of our busiest days. So,
Mhm.
I enjoy doing the education and getting traders up to speed. And there's so many different things. And I think retail traders, will sometimes hear about this event or that event, which, what do I have to worry about?
Mhm.
So, I like to break it down and then decide if there's going to be a trade there is, actually something to do, or is it noise? Is it better just to sit this day out a little bit?
Mhm.
Or is there actually, a trade to do? So thank you for that. Yeah, I enjoy the end of the day videos.
Yeah, it was great stuff. So I appreciate that. All right. So obviously trading is very rigorous. So let's find out a little bit how you balance that trading out. Because I know you do other things besides this. So what do you do?
Yeah, so I'm interested to get your take on this too, but it's a process. You know, really, I do a lot of my research when the market is closed,
Mhm.
right? It's just a lot easier to do the analysis. First of all, you also have, by the time the market is closed, so it is also not just because you have things not moving around, but you also have a full day of data, right? And that also comes at the end of the week too, with your weekly charts too. You know how the whole candle looks for that day or for that week, so it just becomes a lot more clear. And it's just something that I recently have thought a little bit more in depth. That a lot of retail traders like to establish positions in the beginning of the day, but it's so much harder if you're doing not only day trading but swing trading, because you don't know how the whole candle is going to look. But you don't know, because a lot of times you'll see things, there'll be kind of a name that starts to look good in the beginning of the day but just stalls, right? And it kind of ruins the whole setup. So the process with me really starts end of the day and doing a lot of scanning, which I know that you do quite a bit.
Mhm.
So
Awesome.
I do things like scan on Finviz. I have my own, preset watch list too. But I really like just analyzing that at the end of the day or on the weekend, and spending, you know, time where you're not rushed, just to figure out some of these things that are starting to actually lead and show relative strength. I'm a big momentum and relative strength trader. I really want to only own the ones that, the best setups, the names that are really performing. I don't really like to get bogged down in names that are just spending too much time, not leading or stalling. So I'm always looking for that relative strength. And, I particularly like when I find a sector that is starting to kind of break out. So I kind of do a little bit of a top-down approach,
Mhm.
where, of course, I'll look at what the S&P is doing, the Nasdaq, and the small caps are doing. But then, I don't really trade the indices that much, right? Unless I think that, right now we're seeing the S&P just grind higher, right? So there is some positioning that you can do, and I own the Dow stocks for a little while, because they were breaking out, before Nasdaq wasn't doing anything. So I'm like, hey, I might as well just own, make it easy, just own the Dow stock. So I will do it from time to time, but more often than not, I'm looking at the sectors and I'm seeing if there's a particular move that's going on there. And then of course I'm drilling into the individual names and saying, okay, what names out of that, do I want to look at? So that's after hours analysis. Are you doing kind of the same
I am. I
process?
am. I always I like to start my week on Saturday. I mean, just as and I
Yeah,
look at the health of the market on Saturday.
yeah,
That's my goal for Saturday. Is are we in a healthy market that's in an uptrend, or
right.
is there questions going on? Um, and I do my scanning all 5 days a week, and I create my watch list from those scans.
Okay.
And
And
and then
Finviz is what you're using?
I love Finviz. Yeah, it's great.
Yeah.
Yeah.
Yeah. I
Um,
mean, that's another thing, like, in terms of trading over the last 10 years. And since I came out from being an institutional trader to, going back to being a retail trader, when I first started institutional trading, I feel like there was, institutional traders had much more of an edge.
Hmm.
Now they still have an information advantage in some things, but the technology and being able to use a Finviz and go through just a lot of names quickly and being able to kind of narrow things down and really getting efficient in your process, whether it's daily or weekend,
Hmm.
I think is a huge advantage for where it is kind of gotten to for a retail trader.
Yeah, yeah, it's yeah, and I'll go through every one of those charts and then some stuff too. Every night after the market closes, just like
Yeah.
you. I don't like to. I mean, I look at charts if I'm not working that day. I'll look at charts during the day, but I have found, and just like kind of you mentioned, it's better to enter positions near the close than it is
Mhm.
near the open. I mean, because
Absolutely.
I
Yeah.
mean, I've seen candles that just go up and then they right back down, and you get this big wick on top, and it's just like, oh my gosh.
Yeah, and you could have these setups and coming into the day, but if they just don't materialize, throughout the day, it's amazing just to see how the day progresses and what you'll find at the end of the day, and in that last hour of the day in particular, how things will kind of shape up. And I think you find a lot more opportunities then versus at the beginning of the day.
Yeah. And you kind of have you understand the psychology of the market, at least for that day. And, if you zoom out even to that week or longer, because it tells you a lot of information, about the psychology of what people like right now. The market's a little bit extended, in my opinion, at least. It's a little bit extended right now. And you saw that in the price action today. At least I felt like that.
Yeah, I mean, it looks like at this point, I mean, we've had a number of days last week. I mean, especially, these 3:30 ramps are happening, which is nice. Like I'm welcoming this. This is a nice new development that because for a while, I think we would see profit taking a little bit between 3 o'clock to 4 o'clock. So I'm like, hey, this is pretty cool. This was back like it was a few years ago where 3:30 to 4 o'clock, we're seeing a push.
Yeah. Power hour.
What's that?
The power hour.
Yeah,
Yeah.
exactly. So, it is, it always amazes me how the market evolves over time, where sometimes you just won't see things for a while and then
Hmm.
they'll come back. So right now, for as long as it wants to go on, I'm happy with the end of day ramp.
Absolutely. Absolutely. So outside the markets, what do you do to kind of balance the stress and everything that you do in the markets?
Yeah. You mentioned Saturday that you spent some time, going through your process and so forth.
Hmm.
I see a lot of traders do that too. I like to kind of get away from the screens on
Hmm.
Saturday. Depending on the week, I think, last week in particular, there was just the more that things, when there's a lot of momentum in the market, it really, like, I get tired by the time it gets to be Friday because I'm trying to capture a lot of the moves. I want to make sure I'm out in front of them. And if we're just seeing a lot of participation, like today's a different story. Today was very quiet. So it was a little bit of, yeah, a yawn here and there. But when the market is really moving, for some reason, by the time I get to the end of the week, I'm kind of beat. So I like to get away from the screens on Saturday,
Hmm.
if not for the whole day, at least a good portion of the day. But just mixing in exercise. Exercise is really important. Even if you can't go out and run, or if you can't go out and bike, just getting outside, it really gives you nice, perspective, right? And it gives you a breather. You need to get away from the screens. Um, Sometimes I feel like if I'll go through days, and this is, how it used to be when I traded institutionally. You just, you don't get away from the desk at all when it's busy, right? Everybody will, orders in lunch, and, you didn't get outside or sometimes at all, especially when things really got busy. So now, I still do the same thing. I still have the same type of practices, but I love to get outside. Even like, I don't take a full hour. I don't go to the gym during the day. I either go in the morning. I like to bike in the morning, and I like to do some exercise after the close. But it's important to get outside for like 10 or 15 minutes, because sometimes you just realize, like, you need to have a plan every day, first of all, before the market opens. You don't want to be making decisions, big decisions when the market is open. and you're seeing, prices, fly around, and, I read the tape a lot with option activity, but you really don't want to be setting your plan then, right? And you want to be doing that before your day starts to get going. You want to think about it as well after when the market closes. But sometimes you get a little bit off track during the day. So if you spend 10, 15 minutes outside, you'll find that, if you've had a very good day, sometimes people have a tendency to be a little bit greedier on those days, and sometimes you give back because you're just over trading. So if you spend at least 10 or 15 minutes outside, you'd be like, hey, what am I doing? Why am I pushing here? I've had a really good day. Take it easy, So those are the things that I think are important. But yeah, just really just getting outside and exercising, no matter what you do. If you can run, I love to run, but I've got bad knees at this point, so I can't do the running every day. But I can mix in the biking and so on and so forth. New York City is great for biking. What about yourself? How do you get
Me,
away?
so about 2 years ago, I started training jujitsu. So I'm a blue belt in
Okay.
jujitsu right now. So
Yes,
that's
I've heard this in other videos.
yeah,
Yes.
that's my thing. And it's like you walk through that door and all your problems, trading or family, whatever, they all stay outside. You go
Yeah.
inside, you train for a few hours, and they'll wait for you. They'll be there when you get out.
Yeah. Yeah.
But during that time, it's physical. It's there's a brotherhood. There's a lot of pieces in there that's really nice. And so that's my exercise and my physical piece. I think that is so important though, getting that physical activity in, because
Right.
I mean, sitting down is for hours and hours and hours on end it's just not healthy for any of
It's not
us,
good.
right?
Yeah. Yeah. It's definitely, it's one of those things that traders have to battle with. Yeah, sitting down for long periods of time is like the worst thing that you could do for your body. So, lower back, I think things that really hurt traders, I think, that wears them down a little bit is the constant staring at screens and having lower back issues, right? There's tons of traders that have back issues, because it's just not, it's not good for your back. It's not good for your core to be sitting. So
Yeah, absolutely. Do you meditate or anything like that?
I think just on being on a bike, is one of the things that I really like. As long as there's not a ton of people, that's always the thing that you're battling
Hmm.
in New York City, is that if it's a nice day, everybody's out. So sometimes I don't mind when it's like, when the day's not perfect outside, because you could just get a better workout in. When it's sunny, you're dodging anything and everything out there.
Yeah, and I do believe that. I don't believe that meditation is sitting in a room with your legs folded saying om or anything like that. I think that there's different types of meditation: biking, walking. I mean, all different ways that
Yeah,
people meditate and probably don't even realize that they're meditating at the same time. So
sure.
so I think it's very it's a fluid thing. Um, all right, so we know that most traders don't, especially retail traders, they enter it and they don't make it to the other side. They fail. They don't succeed. Why do you think that's the case?
Well, I mean, there's definitely, and it's definitely one of the things to stress, about trader psychology, and it's not as easy as everybody thinks. I think that, I do a lot of education. I manage a trading room, and I think when a lot of new traders come aboard, the expectations, there's a problem with a lot of the expectations. Uh, you know, there's things, it ranges from issues, but coming in and thinking that you can make the same amount of money every day, that doesn't work, right? It really happens for me in bunches, right? If the market is, moving with my particular system, I'll have some really good days, and then the other days it's a little bit more about playing defense, right? But to think that you can come in and be a full-time trader and make the same exact money. I've had a lot of traders ask me like, well, I just want to make X amount every day. I'm like, well, that's, I would like that too, but it doesn't work that way. So I think part of it is um, unrealistic expectations. I think that there has also been, a big push in the last couple of years to trade options. And I think options are a very difficult product to trade. I spent a number of years trying to, swing trade options. And I had success with it for some time. But if the market wasn't conducive to, where it wasn't really trending, when it was a little bit more choppy, I just found that the results were not consistent. And I was giving back too much money on the days when the market wasn't, really doing what I wanted it to do. So it was always a constant 2 steps forward, 1 step back, 2 steps forward, 2 steps back. So I think that retail investors are just they're trading too many short-term options. I'll have this conversation too with traders where I'll say, you need to kind of get out of the short-term options. So like, well, I just rolled my, what's today, April 12th. So Friday's, option expiration. So yeah, I just rolled out of my April, options, and I'm all the way out in May. I'm like, well, that's still short-term options, anything less than 60 days. So there's an education process. And, I think part of that too is just what we see on TV and saying, the things like, hey, you can make X amount of money, potentially trading, whatever I hear potentially, it's like run. So I trade options, and there are places to trade, there's good opportunities to trade the product, but I think there's just too much. And when the market is really moving and there's momentum, you can make a lot of money trading options. But if you don't have that, a lot of traders they'll continue to press when the opportunities are not there. So it's a combination of things, right? It could be a little bit of expectations. You do need to have patience, right? From my day where I am in front of the screens for the majority of the day, really what I try to do is not to overtrade. Sometimes positions, if you just let the position sit, they will work for you, and you don't need to be constantly micromanaging some of the positions, right? Of course, you want to be there. You want to be setting up your steps that go along in your process, right? Mapping out the trade in the beginning versus while you just got into the trade. So there's a little bit of that. There's the inexperience of not having a process, but I think, it's a combination of things. The other thing that I see too now is just, and this is, I think, just, with younger traders, they want immediate gratification.
Yes.
And, the more that you could have patience, and that is very much easier said than done to have patience. It takes time to develop that. But the need for immediate gratification, you're basically torpedoing yourself a little bit by thinking that you need that and you need to overtrade. So
yeah,
those are some of the big things.
Yeah.
But I could go on and on with it.
Yeah. I'm sure you probably see with your service in the trading room and everything else, you see the whole gambit of people that come through there, don't you?
Absolutely. And I mean, it's not always the trader's fault. That they just haven't developed and they haven't learned some of these things. But, if you look at the month of March, right, I thought March was particularly difficult for a lot of reasons. It makes it a little bit easier. If you compare what happened this March with last March, right? Obviously we had a much bigger downward move. And then we kind of came up pretty quickly too. So it all happened very quickly. And while it was, a lot of people got wiped out in that type of a move, if you were somewhat disciplined, you could have actually done better last March because the move happened so fast. What's particularly dangerous for some traders, and I think for all traders, but when we just don't do anything, when we go sideways, when we move down a little bit, and we've been so conditioned over the last couple of years that when we have a market dip, to go ahead and buy it. And I had a trader say last year, towards the end of last year, that if you made a mistake last year, in the last couple of months, the market corrected it for you. right? It was a very self-forgiving, type market. So
Yes.
March, a little bit of February and most of March, the market really didn't back you up, right? We went, we had a dip and we didn't recover right away. So you lost a little bit of that muscle memory in terms of discipline, right?
Hmm.
Because the market just kept bailing you out. If you made a mistake, the market would recover. Oh, things are fine. I'm a great trader. It's fine,
Hmm.
But when there's a dip that goes on for a good couple of weeks, it really, I think it will, at the end of, March, I think as long as you didn't, really hurt yourself too much in P&L, it's actually a good thing that it happened because it kind of tells you that, hey, the market isn't always going to bail you out. You really need to have some discipline so that, you can't come in and say, oh, this is a great stock. It's trading cheap, right? It's too cheap. Well, there's a lot of stocks that are staying cheap that really in the growth area just haven't come back. So, I know everybody likes to use their personal judgment and so forth, but, the market is always right. Just because you think something is cheap, it could stay cheap for a while.
It could go even cheaper.
Yeah, exactly.
All right. And so, okay, so you mentioned that you day trade sometimes, you swing trade. So what's your time frame?
My time frame.
Yeah, in time frame. Yeah, when your trading time frame. Is it just day in swings or do you do longer term? What do you normally do?
It depends. It depends how much I like the name. For the most part, I say the majority of my trades, and I have one account that is specifically a trading account,
Mhm.
and I do have another account that I manage that's a little bit longer term, and I refer to that as a trend portfolio. So those names I only shuffle around, and I'll rebalance that portfolio once every couple of weeks. But and it's nice because I have it as a separate account, so I'm
Mhm.
not watching these names just all day, every day. I'm more or less just, taking a glance at the names like once a week. But for my trading, I'm more of a swing trader, and that could be anywhere from a couple days to a good couple of weeks. I really like it to be a couple of weeks, but if I'm really not married to the idea, we talked about in the beginning of this, that there's been a lot of sector rotation. So if I just want to get a hold of a name or a group that has momentum in the short term, then it may just be a couple days trade. And then also I do a little bit of day trading, right? If it's a name that I think is just going to go from point A to point B, I may try to just exploit that for a day trade or an overnight trade.
And you mentioned that you do options and you do shares. And
Yeah.
how do you like? Is it like 25% options, 75% shares, or about what's the breakdown for that?
Yeah. If it's a name that is, if it's not a high price name,
Hmm.
and it's a liquid name, I'm usually going to default to trading stock,
Okay.
right? But if it's something like Amazon,
Hmm.
or if it's something like, just high price names,
Sure.
right? I may actually look to either put an option on,
Hmm.
or even like I like call spreads a
Okay.
lot. So if I'm bullish and I'm looking for the name to, make a move, into earnings or something like that, I may use a call spread, a $10 wide, $20 wide call spread, where I'm looking to just capitalize on a move that could happen over a couple weeks, and this way it doesn't require a huge capital outlay too. So and I may mix it up. I may do something where I'll try to replicate a stock position where I'm selling a put spread and
Hmm.
buying a call. Something where I'm reducing the position size, but other reasons why I would use options, if it's an ETF like XLF or
Hmm.
something like that, where the options are not particularly expensive, then I may use options just because XLF just doesn't move that much.
Right.
If you put it into an option, you may get a little bit more bang for your buck.
Gotcha.
But yeah, it all depends on the name. And I would say over the last couple of years, I've gravitated more to just defaulting to stock.
Hmm.
From time to time, I've said, hey, I'm going to completely move away from options because of the volatility that's going on. We saw that last year too, when the VIX got up to 40. not going to trade options in this market. You just, it's a bit too volatile. Now we're seeing, a move finally below 20 in the VIX. So if you're an options trader, right, and positioning with long calls, you have to be aware that, one of the components of option pricing is implied volatility. So as the VIX goes lower, the price of those options isn't going to be as high, all things being equal, of course.
Gotcha. All right. And when you put a position on, do you have a set risk reward ratio that you look for, or is it just basically I'm going to let it go until it stops moving up?
Yeah, I try to map out all the trades, ahead of time before I get into it, and I'll look at the chart setup and say, hey, I think this stock could get to this price, and so it doesn't have to be a set ratio of, hey, I got to make 20% or 30%. It's more based on what I think the particular name or sector could do. So that's basically how I'll tailor it. One of the things that I think too is, sometimes when I do that, I think what's important too is to leave that last, we're in the market right now. We've been in the market the last couple of years where you want to just stick with things for as long as you could possibly stay in the trade until you really get a sell signal. So it's one of the things that I think probably, almost any trader out there, unless you're super disciplined and have a really strong method of getting out of the last piece, but having that trailing stop in there, rather than you thinking like, hey, well, this is as far as it should go because it's gone up so much in the last couple of days. I think really trying to capture as much profit as you possibly can out of a trade is like, probably the number one thing that traders, including myself, need to, make sure to do.
Yeah. And when you position size, do you position size a set amount for each trade, or do you just depend on what the trade looks like, what you want to get out of it?
Yeah, I try to use around the same capital per trade, but I will adjust a little bit based on the volatility of the name. There's, if you're trading, just looking at a couple names that just jumped off the page to me today, or just, as I'm thinking about them today. But, a lot of these China internet names or China financial names, they are so volatile that you really have to make sure that you're adjusting your position size, because they're not the same as trading a Microsoft or trading, even in Amazon or, Google or something, even more in the growth area. They could be up 5% 1 second, right? And you go get a cup of coffee or whatever, come back, or at the end of the day, they're down 7% too by the end of the day. So you want to make sure that you're adjusting your position size for the volatility that a name has.
Absolutely. And do you think about risk in any special way, or is it just basically money lost if it gets to this point? Or how do you think about risk?
I mean, I think about risk in terms of just how much exposure that I have out there. So I do look at it as well, not only the how much money that I have out, not in a cash balance, but I also will look at too, what my sector exposure is, if it's a faster moving sector. For instance, we've seen, the semiconductors have been pretty decent the last couple of weeks. Last week, they kind of took a little bit of a break, but, we've also seen things the last couple of weeks, like consumer staples have acted really well. Well, they're not exactly the same, they're not going to move like growth stocks, right? So, today I parked some money in a consumer staple today, and I know that, just using like the average true range and just looking at the pattern of the stock, that, hey, I feel comfortable having money in this area right now, but I don't assume that is, it's money at risk, but it's not the same as me having, how much money that I have, option risk, and how much money I may have in faster moving names. So that always has to be measured a bit. And, it's one of those things that you just constantly need to review and say, okay, look at where the market is. What do I think is going on, and what do I think is going on next in the market? Do I have the right trades on? Right? And I think that's another thing that hurts traders too sometimes, especially the traders that are in front of the screens for a lot of time. Is sometimes you'll accumulate trades, right? Because you'll say, oh, this trade looks good, this setup looks pretty good, but you have to take a step back and realize, well, how many positions do you really want to have on? What's your optimal level of positions that you can manage very well? So these are all things that come, as you develop as a trader, to really know what, when you really want to be maxing your risk out, and how many positions can you really manage well versus just putting on positions because, at that time it looks good.
Very true. And most of your orders, do they usually go in pre-market or when the market opens, or do you wait to the end of the day, like we talked about earlier?
Yeah, I mean, I try it. It depends if I'm looking for something to kind of day trade for the day.
Mm-hmm.
But I've been really trying to hold off, like in the first 15 minutes. Unless I really had something that I was for the day where I've got a setup that I really like, then I may jump into it and leg into it. What I also try to do, which has just kind of one of those things that I've adopted over time, I will say in the trading room, like, hey, I'm putting on this, I'm going to leg into this position. It's a starter position because I really want to see how it manages to get through the day. Now, sometimes the little bit of an issue with that is that, sometimes you put a starter on and boom, it really works and you don't have a full position on, but that's okay with me too, because you're still making money on it. And believe it or not, the smaller position that you have on, the more that you can kind of ride the volatility out. If you put too big of a position on, no matter, like, okay, you think this setup looks great, there's still, you don't know for sure if that's going to work. So the times where I put a really large position on, I've noticed that I freak myself out and I have the chance that I could sabotage the trade,
Mm-hmm.
because even though I really like the setup, if it doesn't get off the ground running, then you get worried about it and it clouds your judgment. So I will try to leg into a position as the day goes on, and then really see how it looks towards the end of the day. And then I make my final call at the end of the day if I really want to put on a more sizable position, or if I just want to leave the starter as is and say, okay, I'm content with this, and we'll go forward with that as a swing trade.
Gotcha. All right. And you post a lot of information, especially before the market opens. You scan the news and you post a lot of information, whether there's um, everything. I mean, I've seen all kinds of stuff coming through from you, which is
Yeah.
is really cool. But what do you use? Does any of that give you an edge, or does it give you a feel of what's going on, or how do you use all that information?
Just, I just try to stay open to whatever the tape is providing, so if it could be a new news story that really takes a name out of, do we want to talk about a couple names that for today?
We can do it now. We can do it later. Your choice. Yeah, we do now. That's
Well,
fine.
yeah. So we'll talk about name, then we'll talk about the chart. But for instance, like, if you look at the stock of video, right?
Mm-hmm.
So
Yeah.
that's been a huge growth name over the last 5 years. But the last year, specifically like the last 9 months, 12 months, it's really been trading in a range, right? And I think there's probably multiple reasons for that. It's probably has gotten somewhat mature. I think the earnings and so forth are kind of catching up a little bit with the price action. And now it really needs to kind of make sure that it's still growing after a decent clip. But it needed a little bit of a catalyst, and I'm hoping today's catalyst. They had an investor day today, and they announced some positive things.
Mm-hmm.
So perhaps like this new information that's on the tape today can get it out of this kind of sideways range that it's been trading in for the last 9 months. So I mean, I'll use kind of new events that we hear on the tape. I'll use a little bit of option, if I see a lot of option positioning going on by funds, because if a name starts to break out of a range, right, then I get excited about the name, but I also want to see that institutional buy-in, right? If we start to get to the top of the range of a name as it starts to break out, and there really doesn't seem to be much interest by the institutions, then it has a chance that it's just going to stall out. But if we start to see that every day, once we start to get out of a range where funds may have been a little bit underpositioned in the name, and now they got to play catch up and get involved and start buying the name as the name breaks out. Like, that's what I'm really interested to see. So it's a combination of things, right? You got to see a little bit of a spark to see a name kind of get out of a range, such as this particular name. And it'll be interesting the next couple of days to see if they start to really kind of push this thing and get it to do something fun, which would be get it out of the sideways range that it's been in for about the last 9 or 10 months.
Yeah, I think it was up like 5-6% today with big, huge volume.
Yeah.
It was a neat move today. All right, and so another thing that you use, I think, a lot is the market webs, right? You use the market webs indicator, and and so kind of walk us through what the market webs is and what it kind of shows you. Do you want to have? Should let me give you control so you can pull up your screen if you want?
Yeah, sure. And we could look at that stock too. Let me see if I can. Let me just move this over here, and let me share the screen. All right, how's that?
Right now, give it a second. I just see a blink. There it is. Perfect.
Good?
Yep.
All right. So yeah, so the market webs, this is one of my colleagues has developed this over time, and I don't do any coding myself. Unfortunately, it was one of the things that I wish I would have gone back and somehow learned to do. But what I really like to do, and a little bit about what I did at Merrill Lynch too, when I worked as an ETF trader, you really have to have pretty good technology in your trading, right? Especially when you're trading, huge size as I was doing block trading. And what I was, one of the fun things that I was able to do is sit down with our development team and work and optimize a lot of trading algorithms, because every institutional trader uses some type of trading algorithm in their tools of trading. So I worked on that for a number of years, and I would basically try different things out and give suggestions to our development team to improve things. So it's kind of a similar relationship that I have with one of my colleagues who's developed this. So what the market webs are, it's an indicator that uses volume at price. So if you've ever used the market profile, so I can turn that on just to show profile, right? So I'm not only looking, a lot of people look at volume on the bottom of the screen, but I like to see it actually where price is, right? And see how price really behaves around volume. I do think that there's one of the things that I learned as an institutional trader as well is that institutions care about certain prices. They will come back to certain levels and they will purchase more, or they will sell, and it could be because of their valuation models, just something that they, is in their model that says, hey, if the stock ever gets back to $600, I'm a buyer there, so go ahead and buy. So you could see that like on the screen where price will come back to certain levels and just bounce, right? And it could be at previous high volume areas. What we refer to as virgin point of controls, where it's almost like a price gap. Price will come back to a very high volume area that it's never seen or it's never revisited before, and you will see price just gravitate right there, take it out, and then it may bounce from there. So we see a lot of these things, that are happening. But the weekly chart of NVIDIA has me interested because when I look at the weekly chart, so this is what's called the value area. This area between 553 and 274 is based on the 2020 value at or volume at price, right? So this volume profile is based where this stock traded in 2020. So what we've done is made this like a significant We use statistics to say, hey, what a really significant level is based on last year's price range, and the volume is 553 and 274. And, so what I'm looking for a lot of times, and how I translate this into my trading, is I really want to trade breakouts, right? I really want to trade when things change a bit, when a name starts to break out, rather than trade in a range. That's really when I want to participate, and own the name for maybe longer than, obviously swing trade, or even longer than a swing trade. But you could see, for example, 2020, this name rallied, and, when it sold off with everything else, where did this thing test? Well, it tested right to the top of value, and then it rallied. So this year we have a little bit of, back and forth action. We didn't get a full on breakout. We hesitated. Maybe this was a false breakdown. We don't know yet, but this is what I'm looking for. And of course, this is a weekly bar, so this is just the first day of the week. So we'll see how volume develops, but I think it'll be, we might have a nice, looking setup here going forward. So, but yeah, what I'm really concentrating on a lot of times is just to the path of least resistance. So I will use multiple time frames. I like to start with the weekly chart for longer term trend, but I'll mainly stick to the daily chart and the 1 hour chart. I could really find things develop on the 1 hour chart, and it's amazing how price will behave once we get to like the weekly resistance, right? So every week it gets a value area for the week. Right, so if I jump over to the 1 hour chart, right, so you could see that, once we got the breakout of value, right, that was we kind of went back and forth here a little bit before the news hit today, but that really kind of clinched it once we got out of value. And then the red lines on my charts are what's known as virgin point of control. So it's nice to see this price just kind of blew past this. But we might see tomorrow or sometime this week, we might see this come back and retest 597. So for me, like I didn't hit this thing right from the start today. It just didn't happen. I was kind of distracted with some other things. But what I'm looking at is, and I started a position today in this, and what I wouldn't mind, and again, it's important to mention, I'm basically legging into the position. So if we come back, if price comes back and retests this 597 and holds in here, that may be a place for me to kind of put on a little bit more risk. But we never know. If this thing wants to keep going, right, and really break out, then at least I have started a position, right, and have some skin in the game. But the plan is, if this thing kind of rests a little bit, maybe has an inside day or something like that, that could be a place for me to really, start to establish a bigger position, which I'm kind of rooting for at this point.
So you try to catch it as it's leaving value then?
Yes. So, and going back to one of your earlier questions, what I really do is spend a lot of time with setting alerts. So I'll do this with anywhere from like 5 to 10 names of interest, sometimes more if it's over the weekend, and I've really come up with a pretty decent sized watch list. What I'll do is sometimes it's like 15 names, right? And I'll just put alerts, at an area where we're beginning to get out of a range, right? So this way I don't have to sit and I don't have to, so it's very important for traders to automate some part of their trading system. So for me, this is where the automation comes in. It's still a little bit of a manual process because I have to set the alert, but as the day gets going, I know that once one of my alerts goes off, I know that that's around an area that, is a particular interest for me and a breaking out of, value. So, Trex was a nice trade. So this was a trade that I set up, we kind of caught this group at the end of last week, but, I like when multiple things, when I've got multiple reasons to get involved in a trade. And, what we started to kind of realize over the last couple weeks to a couple months is that the home builders have been really resistant. And not only the home builders, but names that go into making a house, and in particular flooring, and could just be because more people have, people have more discretionary income right now because of stimulus and everything else going on. But this was a nice little move here where price got outside of value last week, but was just consolidating. And we started to see this move on Friday where we started to extend. So then it becomes, okay, well, where do I think this, I know where my stop is going to be, right? If this thing falls back inside value, then I really want to kind of abandon the trade because it's not breaking out. I still like the name. I think Trex is a great company. But for a trade, if it starts to kind of sit back below and I use the moving averages as well as for confirmation, but if it breaks back below the 50-day moving average, which lines up with the top of value, right, which again is based on it's the previous volume profile, then I know that the trade's not going to work, right? So very easy to find, stop. But of course, we need to make sure that we're talking about the negatives and the positives. So if it doesn't work, it doesn't work. Take it off, try something else. But what I also do is try to map where I'm going to be taking my profits. So I did take a little bit of a profit target today because the stock was up 3%, but I'm looking at 103 as the next, level where I think the stock can get. So, but yeah, it's all in the process of, putting that watch list together, just like as you're doing with your scans, figuring out what names are interesting to you, and then having a plan once they trigger, and putting in place something that's going to give you a heads up that it has alerted.
Yeah, I've started using alerts a lot more recently, and it's been great. This way, if I'm at work or if I'm not in front of the computer, I'm still involved.
Absolutely, yeah. And instead of just watching the screen, right, and saying, okay, is it here yet, or is it close enough? You're just completely taking, anytime that you could take the emotion out of the equation as a trader, you want to do that. And by putting alerts both on the downsides, because it's important once you put the trade on, you want to make sure that you have a piece of the trade out at a potential target, but you also want to make sure, which is I think even more important, is to make sure that you have a downside alert so that that if it's starting to not work, you get a heads up. And again, taking the emotion out and saying, to be able to have more confidence in your system than in the individual trade, and say, okay, it's not going to work, right now. And, we're kind of blessed a little bit with this market that we'll just go on and find some, we'll look for something else. We'll go fish someplace else. So
I actually put my sell orders in right after I enter a trade.
yeah.
My target, I put that in right away, actually. This way, if I am at work and something happens, it'll trigger without me even knowing. And I won't reason, oh, this could go higher. Maybe I should stay in it longer. I'd rather take that piece of the trade off immediately and use that money towards something else I'm looking at.
Yeah, absolutely. And it doesn't have to be, the whole trade. I will put I'll determine, on the onset of the trade, if it's 3 targets I'm going to take, or if it's 4, something like that. So just to have that first, I always like to get that first target in, because it improves your cost basis. And we see it all the time where the stock doesn't do exactly what we want it to do, right? We can't control these little electronic things going on. So, if you get that first target in there and the stock decides to fade and give back the day's gains, and it's a false breakout, which we know happens, at least you lock something in. And if the name gets back to your cost basis or slides a little bit under your cost basis, well, at least you wrapped up something, for gains. And again, that improves your cost basis. We all want those doubles, triples, and home runs, but if the market's just going to give us singles, we got to take the singles too.
Absolutely. All right. Anything else you want to talk about market webs? Because it's really interesting the way that you use it.
Yeah, I mean, I like to I'll start every week with looking at the indices, and there's one particular trader in my group who does just a great job for everybody. we'll look at for the day, coming in, what the overall averages are doing. Now we're trading way above it, so we started the month just beautifully this month. We got above value, and it's just been, we've been running since then. And, I also have the 5-period moving average that, will tell me what the short-term trend, that we're above the short-term trend. It tells me to, hey, stick with it, because there's no sell signal, right? There's no, until price gets below, the 5-period moving average, there's really, you want to stick with it as long as you basically can. But on the shorter time frame, what we'll basically do is, we will note what the indices are doing. And if we get to a particular resistance level, and this happened a lot of, a couple of weeks ago when we weren't necessarily trending, but if we kind of came into a little bit of resistance, we try to say to everybody, hey, we've kind of hit some resistance for the day. Be mindful about whether you're taking off profits here or, adding new positions. Because if we're hitting a little bit of resistance in the S&P for that day, I think it saves some people to tell them that, hey, we're at resistance for the day. Don't try not to be mindful about if you're adding new trades, because we all get sucked in, right? We all see something on the tape and in an individual name, and you immediately can fall in love with the name, right? And one of the issues that happens to every trader is you're just adding risk at the wrong point, right? So if you're adding risk right when we're kind of slamming into a short-term resistance level, you could still kind of trick yourself, and you could put on a little bit of a smaller position. But at least you can kind of know, hey, we're into some resistance where we've tested before and failed a couple times, basically cool it. So yeah, that's another way that I'll use the market webs. Sorry for the long answer to the question, but they're very useful in the indices, even though you're not necessarily trading the indices.
Sure. Because they say 3 out of 4 stocks follow the indices for the most part. They kind of move together.
Yeah, I think something like that, right?
Yeah. All right. So
decent correlation.
yeah, exactly. All right. So go ahead and show me a couple of what a good setup would look like to you, like your Premier.
Let me think about a trade that we did last. Well, I think what we saw a couple weeks ago with the semiconductors, right? If we go back to applied materials, the last couple weeks, but this was particularly nice. What we saw develop the last couple weeks, where like applied materials, I also traded Texas Instruments, because we just started to see a similar setup. But something like this where we kind of came back and retested and kind of held this top of value. Then we got going here a bit, and we came back and I actually caught this move this particular day, which was a couple of weeks back, and I took profits, and I was happy with it on the 1 hour time frame. But what I realized the very next day was, hey, we're actually pulling back a little bit, and I wanted to stay in the name. And I started to kind of add a little bit in here, and it just worked out really well that we held the top of value. It was never really in jeopardy that this trade, was going to be at fault or cause me a stop out. It took a little bit of time, right? Each one of these bars is 1 hour. I think I had to actually wait till the next day. But the same thing was going on here, right? Here was the break that day that I made some money on, the break of value. And just like it kind of tested back on the 1 hour time frame, it also did the same thing on the daily chart too. So you'll find that even if you're on a different time frame, sometimes the levels really match up where you're holding in support quite well. So, again, I like simple setups, and I like to know exactly where the trade isn't going to work. And this thing just really held quite nicely. And then once it started to rip, it just really started to rip. But there it goes, like out of value. So, a lot of the times I'll wait a little bit, even though I'm noticing a setup. I don't mind sometimes missing the first couple dollars of the move. Some people really try to, time the turns. I'm okay missing the first couple dollars for, to make sure that I get that confirmation. Because really at the end of the day, even if I caught the bottom in this perfectly,
Mhm.
what did I lose? Or, what did I miss out on? Just a couple dollars, but here was the heart of the trade.
For sure.
So that worked really well. Um, a similar thing happened in Texas Instruments. Was really nice. A little bit of consolidation around this top of value. Came in intraday and tested, and once it ran, then it ran. But you could also see the support, being tested over here.
Mhm.
Home Depot is a great one for that. Now, full disclosure, I have Home Depot in my long-term account, but this is quite unusual to see something like this, because this thing made it all the way from. So again, here's a virgin point of control. Price actually found a very high volume area that was never revisited, which was all the way back here, was where this previous high volume happened.
Mhm.
This generated this red line, virgin point of control, because if you notice, price for this particular period never even visited this value. Price never even got inside this value area, let alone the point of control, which is where the most volume occurred in that period. So this thing really gravitated, just took this thing out, to a penny, and then I didn't think that this thing was going to reverse like this. A little bit of a hesitation at the top of value for this period, and just has been a crazy stock, for this thing to just continue. And still, while it's overbought, really isn't a sell signal right now at Home
No.
Depot.
Yeah, that's amazing. I
Yeah.
haven't looked at this name in a long time. That's absolutely amazing.
Yeah,
Wow.
and Lowe's is the other one that just has also, and similar type of virgin point of control takeout, and reversal off of, and then when it got to the top of, broke the top of value here a little bit, had a little bit of hesitation there, held the support like a champ,
Hmm.
and then
Cool.
it's just been off to the races. I mean, it's funny how, of course, hindsight 2020 with some of these names, but you talk about what's transpired with the Qs over the last couple months and how difficult it's been in growth land. And then you look at a couple stocks like this, or the straight up, the home builders, and they've just been doing their own, marching to the beat of their own drummer right now. And ITB closed out another high today. So these are the things that I really like to find when the overall market may be struggling, such as, or parts of the market where I think the Qs in tech really got overcrowded, and it's allowed money to funnel into some other places where we've seen momentum just happen. And that's what's a crazy thing about this market is, you know everybody wanting the Qs to go up, and there's so many other areas of the market that participated over the last couple of weeks.
The mega caps are starting to get going too. The Apple, Amazon, Google, Microsoft.
Yeah, I mean, that was something, the FANG stocks, so here's the funny thing about, I laugh because I'll get so down on a group of stocks. Like
Hmm.
when they're not doing anything, I'll curse. I'll be like, I don't want anything to do with this name. Or like, Amazon was a big winner for me in 2020,
Hmm.
but once it stalls out and it becomes kind of what I refer to as a little bit of a waste of time, um, I always get a lot of questions. Hey, what do you think about Amazon? What do you think about Amazon? And I'm like, hey, unless this thing, and you can see, Amazon is finally, it's still a complicated chart, but it's definitely, it's leaning.
Hmm.
And, this was something that I traded last week. I have a little bit of a residual position on, but it's been tough, and Google has acted, so much better. But here was your breakout of value, and also notice the last month, right, which was March, how many times this thing got to the top of the range, top of value, and just could not get through. So if you had an alert, like you didn't waste your time with this name, I had my alert set at like 21, 22, and I did watch it a few times. I'm like, hey, if this Google could break out, it's so bottled up and it's
Hmm.
coiled that if this thing finally gets out of the range and goes the right way, it could have a big move. So, we got that. The other thing to note here with the value areas too is when these things get when a name trades very tight like this and the value area gets very slim, a big move could be coming. Now, again, you got to wait for it and make sure it goes the way that you're that you're planning for it. But I got so excited when this Google, got going last week that
Yeah.
it was a good trade for the trading room. But I'm like, hey, this thing it's finally moving, So, and that was the other thing too, because I think everybody got a little bit. Well, I say everybody. I'm making a conclusion here, but I think a lot of traders, the FANG stocks just basically stopped moving and
Hmm.
they lost a lot of interest. So it's another thing, going back to what we were saying, was just setting some alerts because when they eventually do move, Microsoft was another one last week that it could be good things happen. Fun things can happen
Hmm.
once you come out of being all, coiled up and what I like to call it bottled up. But yeah, so they were quite a story last week, and I feel like the FANG stocks love to rally into earnings too,
Gotcha. Yeah.
because people always want to, oh, what are these names going to do on earnings? Well, sometimes it's the move is better if you take advantage of the run up into earnings, and then you don't have to care what, reading into the price action that happens on the day of earnings and so on and so forth. So I think that's where we're getting that move now, that typical FANG stock run into earnings.
Gotcha. Yeah, I mean, technically, Amazon's still in a gigantic range. It really hasn't done. It still hasn't done anything, even though it's going towards the top of the range.
Yeah,
I
there's
mean,
been
it's
there's been a lot of fake outs,
yeah.
so um, so we're at the top of the range, and this is another name that I love playing via call spreads. I did this a lot. In 2020, it was one of my biggest winners, and I kept on. So I would put on like basically on Friday, I would put on a weekly call spread, $10, $15 wide, get in for about anywhere from $3.50 to $3.80, and it would just print money every week. For a good number of weeks in 2020, where you would have to sit with it a couple days, but I would get into it on a Friday, and the trade would expire the following Friday, and like I said, put it on for around like 370 on average, and I would be taking targets at 550 and then leave some for $7 or $8. I very rarely hang on to a spread all the way for the $10, but
Hmm.
I like to take, if I can get $8, 850 for a $10 wide call spread, I'm pretty happy.
It's awesome. All right. And do you use hard stops or do you use mental stops?
I never use hard stops. I will always set the alert for the soft stop. And then depending on what time that occurs during the day, I always get questions about stops are always a big,
Hmm.
it's people really want to be methodical with these, but it does require a little bit of market feel. If you get an alert and your downside stop gets hit or you get notified that it's going through a level and the overall market just looks, you know, it's got off to a bad start at the beginning of the day. I've had so many times where I'm like, hey, I'm being disciplined and I'm going to follow the stop. And then an hour later, the stock has fully recovered. So it's like, what the hell did I do that for? So it does require a little bit of judgment, but you really don't want to outweigh your judgment with what your plan was. So if it really starts to sometimes the price likes to hang around to stop for a little bit, that's okay. But if you really start to see it lose the stop and start breaking the wrong way, I'll cut it, during the day. Because, we've seen a number of situations where the market will just continue to go down. And it's not a fun thing to happen when you're really stuck in a stock. So I do respect price. I think that above all else, price and trend are the number one things for me. But I will give it a chance to kind of work its way out rather than take a stop and an hour later the stock is doing what you wanted to do in the first place.
Yeah, that's what I do too. I don't set hard stops anymore. I set the alert and then I'll watch it for a little bit. It may only be another 15 or 20 minutes. If it doesn't start to show some support in that area, then I'll just cut it at that point. But
Right.
too many
I mean,
times does it hit a stop and then it reverses, like you said, and it's just so demoralizing, right? You're like, I was right, but yet I still lost money on it.
right. I mean, and the funny thing is, like, there's so many little adjustments to make. And the attention to detail in trading is so important. But one of the things too that happens to traders when you do get stopped out in a trade, it's natural to get frustrated. You're like, ah, man, this was not the plan for the stock. It didn't work out. You get a little bit frustrated, angry. One of the best things that you could do too, as well, is put an alert back in place in case, even if you do decide to take the stop because it's just not working and, the market doesn't look good for that day or even for the week, put the alert back in place and you try to be as objective as possible. And because there was a reason that you were looking at the stock. So if you put the alert back in there, I try to get into the habit. And again, you have to kind of overcome the frustration of the situation. But I've had situations where I get back into the stock and it works. Now, it's happened to me too before where I get back into the stock and it does the same thing again. And then you have to go for a walk after that. But that's why, going back to your question before about, why do so many traders fail? It can really wear on you that, sometimes the market just doesn't want to trend, or sometimes names just don't want to trend. We're looking at this Amazon stock, and this is extremely frustrating for a lot of traders. Going on from the middle of, this really topped out when back in the beginning of September, and it hasn't made a new high since. So to see a name like this trend for so many months and act so beautifully, and then do nothing for a number of months, it's not easy. And I basically just told traders, I'm like, I don't want to, this stock is too frustrating. It's gotten too frustrating. There's so many other stocks that are moving and moving nicely. Set an alert or keep a small piece on and gravitate towards something else, because, that's what the market is kind of designed to do sometimes, is just frustrate the most amount of people. And you see that and you feel that on Twitter right now with the growth stocks, right? And some of them have really, which I thought would kind of transpire over the last couple of weeks, is that some are now outperforming and some have gotten back or close to back to their 52-week highs. But other ones, they're, what's the expression in trading that you hear? When the tide rolls out, you see basically who's wearing underwear or a bathing suit and not. And I think right now in growth stocks, you see a lot of stocks that kind of have that feel that they may have been more fluff than, or more story to them than, actual a really strong looking company.
Right. Yep. That's true. A lot of the leaders from last year are still underneath all their key moving averages. I was actually looking at a bunch of the software names today, and a few of them have recovered, but there's a lot of hot names last year that just look brutal.
Yeah, and it's tough to go back into the group because it's tough to figure out which ones are the ones that are going to come out of this, considering that for a while it was 20, 30 names that were acting so well in 2020. So which are going to be the 5 names, or 4 names or 7 names that are really going to kind of come back and be those market leaders? And it's an interesting thing that we're going to find out, and kind of beginning to figure that out. But how have you been coping over the last month with this
It was good.
rotation and
Yeah, I took a little hit in what was it, in February going to March. Um, I stuck with some names a little bit too long there. Then I went to about 60-70% cash, reset everything, and basically threw away those old names and recreated my watch lists and not really recreate it. It's funny, my scans helped me do that because when
yeah,
it returned just a few names or one day zero names or something like that, it gave me a lot of information that things just, you know, it's time to not look at those old names anymore, basically. And
right.
then a whole fresh batch started coming up, and it was kind of like, okay, well, here's, these aren't software names anymore. These are in completely different sectors, and
Well, I
fintech, I
saw on your
think.
scans, because I look at your end of day scans, it's very
Mhm.
helpful that you put the information out for free. And it's so funny because I think you went on vacation for a little while, right?
I did, yes.
And you see people like you find when you go on vacation, uh, you know, what people, I think people were like hassling you. So like, hey, where's the end of day scan? Like, can you please run this for me? And it's like, hey, you're putting out the information for free every day. And it's really nice that you're doing that. And people, it's just it's funny how the Twitter world is, right? Everybody wants like, this free information that you're giving people on a day-to-day basis. Then you'll have somebody, I would imagine, like hassle you, like, hey, I need the scan. It's like,
It's
hey, buddy, I'm on vacation.
it's all
I'm
good.
with my wife and my
Right
family.
now.
But
Early internet.
but I noticed, like, because I watch your scans, but yeah, I saw for a couple days like Utz was on there.
Right.
It's like, what the hell is Utz doing on?
Exactly. I'm like, are you kidding me? Like, what is this? Right.
Right.
Um, but but
So
I think fintech, from what I'm seeing from my scans, fintech looks really interesting. There's a lot of those names popping up.
yeah.
Um, you know, so a lot of new ones. But
Can you talk a little bit about your scans? And you have what? How many do you run?
I run three. So there's
You
three
run three.
scans. One is a fairly new one. I haven't posted all the details on that, but I'll be happy to talk about it. The first one I call my favorite scan, and it's a growth scan, right?
Mhm.
So there has to be, certain criteria, like it's got to be an uptrend, so it's got to be above all of its moving averages. Has to have certain amount of volume. Has to be a liquid name. Has to
Okay.
show good growth numbers, and the thing that I like about that scan, that's really the neat part, it has to be up from the open for that day. So I don't care if it gapped up, I don't care if it gapped down, but
Mhm.
buyers had to step in and show support and want to buy that name. So it's a way to measure appetite for that name. And so I think that is the key to that scan because it shows hopefully the strongest of the strong names.
Right. And really nice relative strength, right? Because, if the market just is, down for the day or a choppy day, like a little bit like today,
Mhm.
and you're finding those names that, which I think is one of the valuable things about you putting the information out, is sometimes you'll see a reoccurring name
Mhm.
that will just be doing a little bit better than everything else is doing. Then you're onto something.
Yeah, yeah, and I do look for the trends within the scan because, like you said, if you see a recurring name every day, it's on the scan. You know that that is a name that you want to be involved in at that point. Or at least look at the chart and find a good risk reward area for it, if you
Okay,
can.
so let's say you find a name that reoccurring that you think is you know showing some nice signs of
Hmm.
life. What do you do next? Where's your process go from there?
I mean, so I'll pull up the chart immediately. Pull up
Yeah,
the
you want to
chart.
take the screen? Do
What'd you say?
you want to take the screen back?
Yeah, sure. Um,
I don't know. I forget how to. Oh, stop share. Here we go.
there we go. Perfect.
There we are.
All
We're
right.
working.
Here we go, and then I'll screen share me. Hold on 1 second. And it says host disabled participant screen sharing.
So you're in Florida, correct?
I'm in Florida. Yeah, we're at Palm Beach County.
Okay.
Um, can you go ahead and click on my name and go ahead and let me go ahead and do the screen sharing again?
So I stopped sharing. So what do I have to click?
I think if you, do you see where it says two participants on the side?
Yes.
Right there. Click on my name, and does it let you
So I
click
have
on
to make
more?
host.
Yeah, make me host.
Yeah, there we go.
Perfect. Now I'm a host, and now I can share my
See,
screen.
now that we're a year into the pandemic, I'm finally figuring out Zoom.
And I was looking at all kinds of old charts like Lemonade, but we'll use like on semiconductors. Like this would be a setup that I would like. I'll just move us over here. All right, you can see everything okay?
Yep, looks great.
So this was a name that I was watching. It was in the right sector, semiconductors. So one thing I like to look at is, I was in it actually on the breakout, and
Mhm.
it's come back and retested. So I'm about even on this name right now. But to me, this is an amazing looking setup right here. I love
Yep.
when it breaks out and then very orderly, it comes back on decreasing volume. That is
Right.
like money right there for me, at least. Love it. And I also like the 23-day EMA. That's the only moving average I use now is my 23-day. I like that it's coming up to meet price here. So this gives me a confluence of potential support at least, which is going to be this area where prior supply was. Hopefully now it creates some support right there. And we have a rising 23-day EMA. So this would be a, a premier setup for me right now.
Yeah, this looks good.
Yeah, so
Yeah,
that's
I'm kind of watching a couple other names like that develop, and we'll see. Because so many of the semis acted so well 2 weeks ago,
mhm.
and just like with the growth names, I think we're going to see some names really come back strong and break back out to 52-week highs. And this is a great one to watch. And I'm putting an alert on this one here. So I'm going to put an alert on this one at uh, probably 42.80. Bottom of value for me is 42.70, but I'll give it a little bit of room, 42.80. But yeah, this looks good.
Yeah. And I love that in this consolidation here, big green skyscrapers here. So that also says that I'm not the only one looking at this name, that there may be some institutional support in this name for it to go higher too. So I like that right there. So that's
Nice.
one of my faves right now. And I currently own this one too. Um, what was the other question that you were asking me? I'm sorry.
So that's the one scan that
Right.
you run, and then you send another one out.
Yeah, I sent another one. So I do a short squeeze scan, and so I'll just pull it up right here. So this is my short squeeze scan, and only returned one name today because what I'm trying to do in this scan is I'll just pull up all the different pieces to it. So I want a kind of a lower float scan, right? That has a high short float. But the important thing for me is going to be the short ratio, which is also known as days to cover.
Mhm.
So if it starts to move, then I think that these are names that potentially could move very quickly, causing a short squeeze, obviously. Um,
Okay.
and again, these are growth names that are going to be in uptrends, again, above all the key moving averages. So like love, I'm going to switch back here. This was one I'm in and I got from the scan.
Oh yeah, we talked about this one the other
Yes.
day.
Yes, exactly. So this was the one that I've been watching on the scan since here, and I've been involved with it. I took it off, I believe, right here, and I went back into it right around here. And so yeah, so it's things in uptrends, and just to zoom out, I mean, every short person is underwater once it got above, especially this area. I mean, every short's
Right.
underwater. So it's just a matter of time before it's going to hopefully move higher. Also, when you look in this, especially this base right here, again, you're showing signs of accumulation coming up in the base, which I really, really like. Had the
Mhm.
big move. I think there was an upgrade that you posted on this name. And so now, it's had an inside day today. So it's kind of consolidating its big move. Looks great. I'm still in this name. I think it could continue to go higher. And I'll use the 23-day EMA as my guide. I may switch to the 9-day EMA if I feel like it's starting to really roll over hard or something like that, I may use the 9 to get me out.
Right. Yeah, and I like, yeah, on my 1 hour chart, I see 66.75 as support. And, we didn't get that close to there today. So, so far so good. The only thing that is a bummer with this name is it reports this week.
Yeah, right there. Finviz says on the 14th, so 2 more days.
Yeah, two more days. So we'll have to see how it reacts. It might be worth a little bit of an earnings shot, but it would be, in a perfect world, this thing runs, runs into the report,
right?
So that you can kind of, take the profits without the event.
Yeah. Now this particular, I use a separate trading account for my short squeeze. It's a smaller account, and I use smaller position sizes for these names. They tend to be more volatile in nature. So I kind of hedge, not hedge, but keep my volatility under control and potential losses by keeping it a smaller position size.
Yeah, it makes perfect sense. I mean, this thing was opened $64 the other day and ran to 72. So yeah, for trading, it's and that's a nice way to kind of control if you're going to traffic in names like this. You're absolutely right. They're a bit more volatile, and position size is important, because the last thing that you want is to have a name on, and you're trying to capitalize on a momentum name, and it reverses, and it really causes you a lot of pain because of the position size wasn't correct.
Yeah,
so
absolutely. And so the last scan that I run is the I call it the alpha scan, and basically it's looking for institutional names, things that institutions are starting to accumulate. Let me see. So what's on here today? So Uber, Well Built, Palo Alto. CyberSecurity. I don't know if it's because of the Iran thing that happened yesterday or what, but I've seen a lot of those names starting to shape up a little bit. And another semiconductor that I wasn't familiar with.
Tower Semi. It's one that I traded at some point last year, and I kind of got away from it. But it's kind of shaping up a little bit. It doesn't look bad.
Yeah. So this would be the where I identified. And again, if I look at this name, I'm seeing that there may be some, accumulation going on in this name at least. So if it gets above, 3080-ish or so, I don't know what your value says, but I think that's where it would, be interesting to me.
Yeah, and what was interesting too last night, we spoke briefly last night, and it was right before Powell went on 60 Minutes, right? It was the beginning of the interview, and I don't know if you caught this last night, but they asked, okay, Mr. Chairman, what do you view as the risks in the market? Do you think we're anywhere like we were such and such time? And can you elaborate on the risks? And one of the risks he said was cyber risk. So I don't know if that was the catalyst for today, but I was surprised that was high on his list of risks for the Fed. To be concerned with cyber attacks. Yeah. So I'm not sure if that was part of the reason why things got a lift, but I do like the look of that Palo Alto. Not a name I've traded in a while. I've been sticking more to like the Okta and the CrowdStrike, but
Okta looks pretty good too.
If Palo Alto wants to jump up and come out to be one of the leaders, I'm okay with that.
Yeah, it's funny. CrowdStrike and even Okta were last year were amazing, and they're starting again, getting above their moving averages again. So that we're seeing that switch over. Looking at the ETF, again, very similar, starting to move higher.
Yeah, Okta, I've got a nice level for it for the week of support, which is right around 242.
242.
So if it can maintain around, even if it wants to consolidate some of the gains that it's seen over the last couple of days and chill out above 242, which also kind of would say that it would consolidate, and that's off of the weekly chart. Mm-hmm. But it's coming right into the 50-day moving average too, which also would make sense that it might have a little bit of pause in the action here too, but I like this company. And I traded a few times back in 2020, so this will be a good one, I think, to keep an eye on.
It's Splunk. I haven't looked at Splunk in a, oh, yeah, Splunk. Yeah, Splunk looks not nearly as good.
What's that?
I said Splunk doesn't look quite as good in the same thing. I was just checking out Splunk.
Splunk, I don't fully understand why. Well, actually, it finally got it going a little bit today, but when they reported earnings, they had solid earnings. It was one of the things I think where they just got a little bit unlucky with while all of growth names were selling off a bit. Yeah. And Okta kind of went with that too. I didn't think the Okta's results were too bad either, but they really got punished. And I thought that the Splunk really had pretty stellar earnings, and it still can, it's gone up a little bit from the lows, but maybe a name to watch because it may just be taking its time. But
true.
it has been an underperformer.
Yeah, brutal. All right, so talking about markets a little bit more. Actually, you know what? Anything else about the screener? Again, it's just more institutional. Not to.
Yeah, this is great. I mean, it's a nice way. You have your process down, and
and there could be 10 or 15 names on here, or there could be 4 names on here. All what the market gives us.
Yep.
Again, and it's just trying to see where they're at. Oops. All right. So, what do you think? For you, talking about Christian now. What are your trading demons? What do you struggle with when it comes to trading? Is it FOMO or what's your biggest fear or need?
Yeah, there's a few things. There's a few, and I think everybody has a few things that kind of is a somewhat of a reoccurring thing that happens. I really think for not just me, but a lot of traders, making sure that they're making adjustments. Mm-hmm. And as we approach right now, I think we're pretty mature in this swing. Right, we've talked about how the S&P is grinding higher, mm-hmm. The RSI and the S&P is now at like a 74, so it's overbought. Right, it's definitely an overbought territory. So want to really be making sure that I'm not adding too much risk here. If I have I kind of go back and forth with, if I'm still seeing a lot of good looking setups, then, I may be inclined, and I did that a little bit towards the end of last week. I said, hey, I'm really liking these 3 or 4 names, and they're in different groups. And I'm like, hey, I like what's going on here. But what I always kind of come back to is just your overall view of how much you want to be kind of, risky. And there's little things that, because I trade both options and stock, some of the adjustments that I've tried to make over the last couple of years is, well, hey, I can still, because I don't have a crystal ball, I don't know when the market's going to top out and when we're going to pause. So I very rarely get down to like 100% cash. There's certain times over the last couple of months where I've gotten to like 80% cash. Mm-hmm. But I also so I'm okay around these levels having some exposure, but I certainly don't want to be overexposed right now. Gotcha. So overexposed can be, for me, either just having too much money in the market, or it could just be having too many individual positions, like the quantity of positions. Mm-hmm. So that's something where, because I'm always in front of the screens, I manage a trading room. Sometimes it becomes a little bit to my detriment, because I will continue to find good, I'll find setups. And I just have to really be cognizant of, communicating that to my members, as well as, making sure that, I'm in control of how much risk I want to be, and where I don't let the individual setups get away from my game plan of getting overexposed to the market at the wrong time. I would say, so that's just a reoccurring thing that I always have to think about, where we are in the market versus how many positions I have on, because it will sneak up on you. You know, at the end of the day. And it's tough because you have to come to terms with, well, hey, if you put too many positions on, you got to take one or two. You got to figure out the ones that are least desirable at this, you know, you got to get rid of the undesirables, right? So that's number one. Number two, I would say when the market is pulling back, right? So if I could share my screen for,
Yeah, I can get that going.
I'll give you a couple examples. But when the market is pulling back, I've had a tendency over the last, I don't know if a couple of years, just make sure you hit unshare on yours. Let me see if I can do it. This will stop. Yes. Let's try this again. And let's go back here.
Perfect.
All right. So if we go to the Qs chart. So I have a tendency sometimes to say, okay, we've had a market dip. You know, and sometimes, again, I think it had to do a little bit with muscle memory, you know, over from when we topped out here in the Qs on February 16th. You know, we spent some time consolidating. You know, we kind of came across this low, and then it became a little bit of a judgment call. Like we actually got to the bottom of value, this was on Fed Day. And I made the unfortunate thing on this particular day. And I'd like to share the mistakes too, because we don't all have winners and we are human. And it's very important to realize that in your trading, that you're going to make mistakes. But, you know, we had Fed Day and it kind of felt like we got the all clear for that day. And I really don't like Fed days. And this was, you know, the last one, because the market is kind of trying to figure out really what the takeaways are from that meeting. And sometimes it does take a whole nother day. So I had added risk on here. I thought we were back above the 50-day moving average. I thought we were in a little bit of the all clear. And up until this point, my March wasn't really, it was okay. You know, I was down for the month, right? But adding in here and then, you know, waking up and seeing us kind of fall apart here a little bit down here. And we did recoup. But I had just added the wrong type of trades in here, right? And so as I mentioned that, you know, I do traffic and options, and I put on like, not a real short-term position in the Qs, but a couple weeks out, and it just started to really mess with my mind and my, you know, overall attitude that I was losing money on this particular trade. So I, of course, like took it off at the worst, probably. Well, I don't think it was the worst time, because it did take a while before this to straighten out. But what I should have done, and this is what I always come back to, is that you don't need to be a hero on these days. And you really want to be cognizant of your risk as things start to come back. You know, you don't need to jump back in big size. And I think on this particular day, I put on a couple trades. And I had to unwind them for losses. So that really, like, from a mental standpoint, just was not in a fun place to be. So I've had this happen to me before, where I've done a real good job at managing like the first step of it, but being cognizant of going back, realizing that, hey, there's some technical damage that happened here in the charts. We may not go right back up. And I kind of had a little bit of FOMO. I do watch a ton of option activity, and I try to be really upfront with people. I talk about this in my videos too, that sometimes option activity can really lead you down a bad road, because you will always see call buying every day, right? And people talk about, well, this was an aggressive call buyer. It was swept. We see every single day aggressive option trades positioning. Some are right, some are wrong. You really have to think independently and not get caught up. And, you know, I think on this day too, that they were buying a lot of Microsoft. Okay. But, you know, maybe my view that day was a little bit too short term. You know, because it really didn't do much, right? For about you know, from the time that they started accumulating Microsoft, you had to sit with 1, 2, 3, 4, 5, 6, 7 days before this thing really started to act well when everything else was going on, right? So it's really important to make sure that you've got conviction and that you're sizing the trade appropriately, because you need to be able to withstand a week, sometimes longer, before you're eventually going to be right. Because this wasn't necessarily like we didn't go back and revisit the lows. It was just a difficult period to get through. And if you put your position size on too much, and especially the way that options decay, you're really kind of struggling with, you're in a bad place. Every day at this point, you're coming in and your P&L's down and you're like, how much more pain can I, endure? So what I come back to here is it's okay to take shots on things, but you want to make sure that you're okay when you take those shots, that you're not getting, over aggressive. And you also want to think about what's in front of you versus, this plagues a lot of traders, including myself. You're like, hey, well, last week I actually, I didn't do well, and well, I got to get back to my year highs in my P&L. So we always have that we're battling, that we want to be making money, right? We're all in this to obviously make money, but
Sure.
at the same point, you really have to balance that demand for making money versus what the market is giving you, and sometimes rushing and adding too much risk at the wrong time could really not only hurt your bottom line but hurt you mentally, which is really what you want to try to preserve when you've got a long drawn out because this was not fun every day. To say a couple times we started to rally and fail, we got up to here and fail, we went a little bit lower, but the next day we didn't really recoup much of it. So it was a frustrating time. And by the time that I did figure this out partly through this, that hey, stop looking at the cues, look at some other areas of the market that are participating better. And you look at what the Dow is doing there.
Beautiful.
And, you really had to get out of the mindset of getting bogged down with, it's like, hey, forget about the cues. Let them do what they want to do for a little while. Focus up on, some of the things that are actually breaking out to new highs. So this is a very long-winded answer, but I think it's important. Is that what hurt me too much was just the position size, on a couple of things that I was in. And the moral of this, just to wrap up the story here, is I think everyone needs to have a month like that once in a while to get them back to where they need to be, to get really focused. And whenever the last time because I had a negative month in March. The last time I had a negative month, it was either September or October. And it really straightens me out going forward, because like I said, we just didn't have that muscle memory of a sustained pullback. We had, we're down one day. Oh, the next day we're up twice as much. So it was fine.
True.
But we just hadn't had anything since basically, October that lasted and caused a bit. So you do need that muscle memory. And if you lose that muscle memory, you just have to make sure that you've got either a plan written down, something that you can reference to know what your tolerance, should be, so that you don't make the goal of which is that because we're going to get market dips again at some point, we don't know when, but you want to try to get better at managing the whole process.
Sure. Absolutely. That was great. Thank you. You mentioned something along the way that the time aspect of it. What happens when you get in a position, it doesn't really hit your stop, but it doesn't really take off either? Do you have a set, like 2 days, 5 days, 2 hours? How long do you give it to actually start to work?
Yeah, and that's definitely a difficult call. Sometimes I've gotten into a name and it starts to break out, and then you'll see the name basically back up a little bit, but it's kind of just in limbo for a little bit. And I try, because it's a tough thing, because sometimes you'll lose focus on that name and you'll start to add risk in other places. And meanwhile, you forgot a little bit about that trade. What I try to do is, I've been kind of, and again, I'm always making tweaks to my process. I don't think any of us gets to a point where we figured this out completely, figured out the game completely. We're always battling, it's a mental game. Sometimes if I have a decent sized position on and it's just not breaking out and it doesn't hit my stop either, I may actually just reduce the position. Okay. So I'll keep it small. So it's almost like a placeholder. Mm-hmm. And so all these things, I try to basically trick myself to say, hey, well, you don't need to take the whole position off because it's not really a sell signal. Keep a small piece on, mm-hmm. and then maybe put an alert at your breakout point that you were originally watching, and you could always add it back. And if not, if you don't, well, at least you've got the position on, so that sometimes just a mental win, even if it's a small amount of money that you make, does your mind hey, you did the setup, you stayed with the position, even though it wasn't a full-size position that you wanted. But when you do the analysis and you get the results, there's something it's gratifying too. Yeah. Because we can't get into every single position. We do analysis on a lot of different names, mm-hmm. and there's no way that we can be in every position. So you got to make some decisions.
Yeah, absolutely. Excellent. Thank you. All right. So moving on to social media, because that is also something that really intrigues me, and how people use social media to their advantage. Yeah. So how do you view FinTwit, and is that the only social media you use, or do you use anything else?
Well, I'm on TikTok regularly. No,
okay.
No, I think right now the majority of what I use is Twitter, and Twitter has been, I'll talk negatively and I'll talk positively about Twitter, but I think finding individuals like yourself who are just you're always giving out ideas. You're very selfless with your analysis and so forth. You're always looking to help people. You do a ton of interviews too with people. So, so finding someone as yourself, Twitter is become just very, very valuable for being able to, and again, I go back to there's always this argument about, not always, but this last year has gotten to a big argument about institutional investors versus retail investors. And it is such an advantage to find people like yourself. And, I probably have about 10 other people that I really, maybe not as many as 10 people, but just really good followers who are just putting out information. And it's not so much that it doesn't have to be Jack's putting out an awesome setup. It's just information for me to kind of to use in my process, right? So it doesn't have to be he's putting out so many great setups, he's such a great follow. It's just the fact that you're doing it day in and day out, and it's just very helpful for retail traders to have someone you're contributing, right? So it's kind of it's an unknown community, and I think that to find people like yourself and that just do this continuously, I think is extremely helpful, and it's a huge advantage to find someone who's doing something a little bit. The other nice thing is you don't necessarily want to find someone who's doing the exact same things as you. Mm-hmm. You want to find somebody who's uncovering something else that really wasn't in your analysis. And I think people struggle with that. They want to cling to something that is the same exact thing, right? And I think really what happened on Twitter in particular over the last month or so is that, going back to the growth stocks, I really think that the growth stocks got way overcrowded, and you had so many people talking about the same stocks.
Yes.
And when I found some people to branch out and to say, hey, well, it's not just all about NASDAQ and growth. You're going to find other places. So, that was a beautiful thing, in terms of using and seeing some people actually put out different looking setups that were working. The other thing is, in terms of sentiment, right? When I started to see when I started to see so many people talk about Fubo and talk about, names like that. For some reason, I always use Fubo, but and some people are still stuck on those names. They just want to say, hey, well, what do you think Fubo is going to do today? I'm like,
Palantir,
I don't,
right?
So
Palantir is one of those.
yeah, I get a question every day about Palantir. What do you think Palantir is going to do? I'm like, it's still between $22 and $24. Set an alert once it breaks out of the range, then you have something. But I think so many people are so hooked into so many of those names that you could also use that as a little bit of an advantage, that if you're finding something else, that you've done your research, and it's a little bit gratifying and you actually, like, I feel like sometimes people on Twitter, you actually want to like shake them a little bit and be like, hey, stop looking at the Palantir and Fubo. There's a whole nother wide, range of stocks that are out there that may actually be outperforming. And it's a difficult thing because people's emotions get into stocks. They become in love with them. Tesla's another one that's become a little bit of a frustrating stock over the last couple of months. But hey, I like Tesla too. I'm fundamental, I'm a long-term bull in Tesla. But if it's not giving you the trading opportunities, you gotta, you gotta move on. It's like, it's like kind of, dating back in high school or something when it doesn't work out. Hey, you got to move on.
Right. It's true. It's true. We anchor to those names.
Yeah, and so people become so passionate about it. But I actually traded Tesla for the first time in a while today. But I know it's got to get through a little bit of resistance up at 710. Yeah. But I'm watching. And I'll get back involved in this thing. If this thing can get back above 710.
Yeah.
Notice that this thing had issues with this last month too. Right around the 710, 720, this is such a high price stock that $10, I don't think matters that much, but, I'm okay waiting. Like if I have to wait through this consolidation and chop, because, the thing that people forget about is, again, I don't think you have to pick the exact right time, because what I'm more interested is not the incremental move from 700 to 715. I want to see this thing go up to 772. Right? I'm looking for a $50 move. I'm looking for a $100 move. I don't need to time the $10 perfectly to be, and say, and have the passion with arguing with everybody on Twitter about, why you like Tesla better than the other, who knows why, but that's the negative part of usually I like to say the negative first and then do the positive. I'm doing it backwards, but the negative is that just the constant bickering, and there's a lot of traders that they would rather be, of course, right than make money, right? They would rather be correct. And it's not about that, it's about, we're all in this, of course, we want to have our homegrown ideas and so forth and be right. But at the end of the day, it's, it's the money, right? That most of us are trading for, not necessarily to be right.
Yeah, 100%. 100%. It's interesting when people, you say you post something on Twitter and there's a nuance in there, and then they start picking at that nuance that you said. I'm like, dude, it doesn't matter what you call it. This is what I'm saying? Call it whatever you want to. Right. Who cares,
Oh, that's another thing too. It's like, oh, well, this, it's going to fail here or whatever, that's fine. I mean, you don't have to like correct somebody. I love, people who just put out a ton of information. I always find it funny where people will heckle that person where, hey, like, I don't know what this means. Well, did you at least Google what it meant? And like, at least try for 5 minutes to do research.
Almost there's an Investopedia article on there, I promise you.
What's that?
There's an Investopedia article about that, I promise you, right?
Exactly. I mean, because that's the beautiful thing about today is that, when I started, my endeavor into trading when I was in college. I'm predating. I'm basically going back and you know, saying how old I am, but you didn't have the same resources at your fingertips. You could just Google something and literally 15 seconds later you get the answer that you're looking for. But yeah, I do have a problem with the people who like, hey, I don't know what this means. Well, did you at least like I can understand if you exhausted the 15 seconds of looking
Right.
and couldn't find it. But nowadays it's really nice to be able to just go and look and you could get the definition for any technical indicator, a technical pattern, and you can get so much information and examples
Hmm.
that you don't have to yell at the person who posted it. Independent research is so important. The whole thing that happened with the Wall Street bets and the major problem that I had, or I had a few problems with it, but one of the problems that I had was that there was a lot of people that were not doing any independent research, right? They were saying stupid things like, this is the way that this is supposed to work. And well, if hedge funds did this, then I should be able to do this. Well, that's two wrongs don't make a right, first of all. So, and then if something goes wrong against you, oh, the market's rigged. Well, let me break it to you that the market's been rigged for years and years. It's your job as a trader to adjust to these things,
Hmm.
and the world is not always fair, and you got to overcome that. So anyway, you asked for my opinion, and I give it on a lot of things. And it was a difficult time. I think this occurred back in January, to see names get somewhat manipulated. And I made fun of a name the other night that somebody put out a similar thing on one of these forums, and it was the equivalent of what I refer to as a chain letter. Back in the day, you used to get chain letters
Hmm.
by email and said, hey, you have to do all this, this is what's going to happen. We're not going to sell, we're going to hold. First of all, that's market manipulation. You
Hmm.
can't say that everybody's going to do this together.
Right.
It's also collusion.
Collusion. Hmm.
And then it was the equivalent of a chain letter. Hey, we're gonna flood the order book of orders. It was like there was about 5 things that were listed that were really illegal things to say, and it was like you're picking a stock that that you can manipulate because it's so thinly traded. But it was the equivalent, like, if you don't do this, you're going to get bad luck for 10 years. I'm like, I've seen this. And that's the funny thing with these forums too, is people think like, oh, this is new, right? This is a new thing that's happening. This has been happening for years and years and years. It's just been a different medium. It's happened on message boards. It's happened uh, newsletters. People would, send
Hmm.
out these types. So anyway, so I go off on a tangent. But
Remember dry
it's always
ships?
what's that?
Remember dry ships a few years ago?
Oh yeah, yeah.
Yeah,
So
same thing.
it,
Same
it,
thing.
it happens over and over,
Yeah.
but you have new market participants, and you feel bad. I do end up feeling bad for people who think that this is the way that it is to make money, to think that they need to do some type of manipulative thing where they're all in it together,
Hmm.
and there's no profit taking. Like, as they say, this is the way. This is not the way. That's the wrong way.
I think it
So
goes, yeah, and it goes back to what we said way earlier, which is that they're looking for this big increase in price in a very, in a very short amount of
immediate
time.
gratification.
Immediate
Yeah.
gratification, exactly.
So, but
Yeah,
it's been an interesting year in many facets.
yeah, absolutely. And I agree with you, by the way, about Twitter. I think that it's an amazing platform, and people like you that share your videos in every night and tons of information all the time. It's not about the chart setups as much as it is about kind of
The
honing your
information and the
craft.
analysis.
Yeah, it's now right, exactly. It's like you put things out there, you get feedback on them. Sometimes, it's been pretty amazing, but it's very noisy at times too. Like so for me, I only follow 50 people, and probably only about 35 of them, are market participants. People
Right.
like you, Joe Fami, Richard Moglen. I mean, a bunch of people that I really Ben, lots of great people on there. So you found I found a lot of great people, but also I realized like I can't follow too many because there's just too much noise.
Yeah,
A lot
right.
of stuff in there.
You don't want to get yourself to a place where, yeah, you actually have just too much information and it distracts you away from, I talked quite a bit about having the right number of positions and so forth. You don't want, you want to balance the FOMO
Hmm.
and, the FOMO of trying to make money, because again, everybody wants to do that, with, the right amount of analysis. So just the right amount is good. Too much sometimes can be detrimental too.
Absolutely, absolutely. All right, so let's wrap it up. Give me one of your favorite charts for this week. Let's see what you got.
Oh geez. Favorite charts for this week.
Yeah.
Um,
And today's, by the way, it's Monday, April 12th, 2021.
oh boy. I'm not sure. I tell you what, I'm not sure if I think what I'm really interested in watching is what develops with NVIDIA.
Okay.
Um, I
Yeah.
think and then I've got like, a bunch of things where I think that are interesting, but I just don't have, and I think just maybe it's because, we were talking about how the market's a little bit extended here, that it could be that because I don't have, something that is just jumping off the page to me, it could be just at the stage of the market that we're at, that things may need to pause a little bit for me. But usually I've got like three things, right,
Mhm.
that I would jump out at you. The other, I can tell you, besides NVIDIA, I am watching closely the rest of the semiconductors, because as you went over with Owen Semiconductor,
Mhm.
a lot of these names broke out and they spent last week consolidating a bit. So they rested. Now I want to see if they're going to take that next leg higher.
Yeah.
I'm watching a couple of the cyber names and a couple of software names to see if they can recoup. One name that's kind of been giving me a little bit of a nightmare, so I'll leave with this one. The reason why it's been giving me a nightmare, the C Limited, and I'm long this in my my trend trading account, but I haven't really traded this from the lows. This is always my go-to, or has been. It doesn't have to be going forward, but it's been my go-to name over the last couple of years to buy on dips. And it just went too deep for me.
Yeah.
It did take out, we talked about virgin point of controls, took this out and reversed.
Mhm.
But then I had a little bit of a mental battle with it, because I'm like, well, what is it going to do when it gets to the 50-day moving average? I really like the 50-day moving average, because in this market, it does tell me, we've been in a stronger trend. So I get worried if names get back to the 50 and they stall out. So this happened back here on 311, where this thing, broke trend,
Mhm.
rallied back, and it stalled. So I really didn't participate too much, and I do think it was a good buying opportunity for the long term. And it's important to have the right time frame, because if you're a long-term investor, that was a good buying opportunity. But if you're a medium-term swing trader, I just didn't know what the name was going to do at the 50-day moving average. Now I'm a bit more interested, because it kind of stalled out here a little bit and is back testing the support of the 50-day. So I'm interested in this one too, and we'll see what it ends up doing. But I wouldn't be surprised if it continues along its way, and I do, because I trade a lot of medium term stuff. I do try to look for things that I can hold on to for a little bit longer than a couple days to a week or so.
Mhm. Yeah. And I totally get what you're saying, because somebody yesterday on Twitter actually asked me for my three best ideas going to this week. I mean, and we had talked about that, which is kind of funny. Like, oh, how, just the way it works, right? So, okay, I had a hard time finding my three best ideas. So I
Yeah,
came up with three because they were the three best ideas, but I didn't love them. They were just three ideas at that time that were my best, but
yeah,
they weren't great ideas, if that makes
right.
sense.
Well, this is a great point too, because if you get to the point when because it's not like you're not doing the analysis. You do
Mhm.
the analysis every night. I
Mhm.
see the information that you put out. So it's not like a lack of you're not doing your homework. you're doing your homework, but you're just not finding the setups. And I think when you get to that point, my opinion is you should try not to press. If the setup isn't, you know, getting you a little bit excited, then perhaps it's just not that great of a setup.
Yeah. Yep. Excellent. All right. So I think we should leave it right there. That was excellent, Christian. Thank you so much.
Yeah. Could I just say one more thing?
Oh, please.
I know we talked for a long time.
Yeah.
But with all the information out there, right? And there's a wealth of information. One of the things that I would encourage people to do, you know, especially I think because growth got overcrowded, is make sure that you develop your own process, right? Get to the point where, and that takes time. It takes experience to do. It takes trial and error. But I think the goal for anybody who has started out over the last year and who really wants to get good at this game, and maybe they're intermediate and they haven't really gotten to the point where they think they're an expert, is to develop your own system. Be able to take information from Twitter, whether it's like a follower, somebody who you really love, but put that idea into your own system and come up with your own independent thought in terms of whether you like the name or whether, you know, if it doesn't make sense for you. It's okay to have somebody that you really like to follow on Twitter that you don't need to put on every position that they put on. Put on the positions that make sense in your system and use the information as a lot of times it's free information. It's great to have and build from it. But I think too many people end up following rather than taking bits of information and putting it and developing it into their own system. So I just wanted to say that.
Yep.
Thanks so much. I appreciate being on tonight.
It was awesome. And like I said, my system that I have for me, nothing original in there, but the way that I put it together is original for me. And that's kind of goes to what you were saying, I think.
Right. And once you do that, you get a lot of confidence. You know, and it does take time. And it's a process in itself just to develop that. But once you get to that place, you will become a lot more comfortable and confident in what you're doing on a day-to-day basis.
Absolutely. All right. So where can people find you?
So of course on Twitter at Fromhertz, this is my initial name and last name. Make sure that it is the right one, because there are now clones all over the place of me. I've never seen so many people who wanted to have the name Fromhertz in my life and over the last couple months.
It's crazy.
So make sure it's the right spelling. It's Fromhertz. And then of course, Tribeca Trade Group is the name of our company and trading room that we do the analysis daily in.
Beautiful, beautiful. I will have both of those linked in the description below. So if everybody wants to find you, they can just click below and find all that information also. Okay. Christian, again, thank you so much. This was absolutely amazing. And I appreciate it. This should be out relatively shortly.
Awesome. This was a lot of fun. Thanks for having me.
Take care.
See ya.